Good evening. This is Doc Severson for the Theo Night Report for Monday, December 18th. I'll start out tonight by looking at the S&P 500. I think we're almost there, at least for this initial swing. We've got this characteristic S-shaped curve, and we are just getting into an extreme level. Now, what we're finding is that the only accurate way that we can judge this chart is off of the daily chart. So regardless of the fact that we have all this exhaustion here, to levels that I have never seen before. So normally these do come into play to let us know to anticipate range expansion moving into range contraction, or at least moving into consolidation here. But as we get into the end of 2017, we're just seeing stupid levels of exhaustion that, again, everybody's just got their palms up saying we've never seen this before. So what can we use to help time this? Well, the daily exhaustion, when it gets down to a level of about 30 or so, is giving us at least a heads up that we're about ready to see maybe the next level of consolidation, which is only happening for just a very short period of time, just a few days at a time. So we can kind of look back at this in 2017, and every time that we've gotten down to this level of about 30 off of a move, we've seen, depending on how deep this goes, anywhere from a week to a couple of weeks of consolidation for this. So this was one in the spring. Here's one that we saw as we got into July. Here's the next level of breakout, which got into mid-September before we saw about a week of consolidation. And since that point, it's actually started to accelerate to the upside. We've almost gotten into a completely vertical slope to the upside, but you can see that every time we've gotten to a level of about 30 on this study, and we're starting to also see some long tails up there, some upper shadows that indicate a little bit of profit taking near the end of the day. Something that I'm seeing in the Russell 2000 small caps is kind of interesting just from a fractal perspective. So from this consolidation, we saw a quick move down and then a slingshot move higher. So that's a larger time frame move. And then what's happened since that point is we've gotten the same type of move in miniature, and it keeps getting smaller. So that tells me something, because we saw that same thing here. If we zoom in on this, now we see the same kind of move. We see consolidation, slingshot down to a new higher high, and then we see the same thing happening in miniature. So each of these getting smaller and smaller and probing into a smaller move to the upside. So it's almost like this is just getting smaller and smaller and smaller until it eventually goes into corrective. Now again, let me state here, I'm not looking for this thing to crash from the top. All I'm looking for this to do, whenever it does occur, is just set up with a larger range, an extended period of consolidation, which I think will be good across the markets, regardless of whether you're bull or bear. It's going to be relief to the bears from this. It's going to give them false hope, I think, because normally these initial moves do lead to new highs. But this is going to allow markets a chance to catch up after an extraordinarily strong 2017. Even some of the Wall Street is already sandbagging for next year. They're looking for anywhere from 7 to 10% gains in 2018. The other thing I'm seeing here is an absolute lack of any kind of fear that's in this market right now. Just completely, we're hitting new lows in the volatility futures as we speak at this point. So just complete complacency. Now, of course, there is a great deal of risk with a market like this when we have this much complacency. One little spark can act as the tinder to cause some fairly big moves. So we've seen this before from time to time, various years. Some things to come to mind is 1987. We've seen this most recently in 2015, even the 2010 flash crash. But as you think back to all of these, each of them eventually led to higher prices in the intermediate term. Short-term weakness, intermediate-term strength comes back in, but that is just the transition into corrective, the transition into a larger range that we're looking for. Now, before I move on to the next topic, I just want to provide some, I guess the word is perspective here, is that I think we all have our own confirmation bias as to what we think the market should do and when it should correct and, how much pain everybody's going to go through, those kind of things. But what I want to, again, to bring to your mind is that this quote from Alan Greenspan, where he talked about irrational exuberance. I think most people think that he actually gave this speech back in like 1999, 1998, something like that. But would you believe that he actually gave this speech right there in December of 1996? And this is after the market had been running for a couple of years already to this point. But that was not even the halfway mark that we got to. And the thing that you'll notice also with this move that we had, this tech bubble, right? So everybody agrees, even 15 years later, that it was a tech bubble. But what you'll see is that we have all of these little moves that are inside of here. Each one of these, even the long-term capital management move back here, each one of these is almost a reset along the way that allows this market to continue moving like this. So what would you personally do? And how would you change your approach if you were to know that the market were to go on like this for another 3 years? Maybe seeing some of these consolidation patterns along the way, which is kind of what I've been talking about today, is that I'm expecting something to show up to kind of reset this market. Don't think we're going to crash from here at this level unless we have some type of really nasty exogenous news coming into the market, which has not been priced in and nobody ever expected to price it in. So once again, I think the best way to approach this is to strip your confirmation bias off as quickly as you possibly can and let price tell you what's actually happening with the market. We will always see markets go into more volatility near the top. We're just not seeing it right now, guys. Now, last week, you couldn't get near any kind of a financial news site without seeing some article about Bitcoin, Bitcoin futures, whatever you want to talk about, right? So is it in a bubble? Is it not in a bubble? Is it about to crash? What's going on? The latest thing. So it was Bitcoin every day, all day, 24/7 last week. So a little bit of that's died down as the prices, if there is such a word as being stabilized, it's certainly done that over the last couple of days. And it's also, I think, a good thing that we've now started to see not one, but two exchanges offering futures here. So this is the CBOE or CBO futures that the XBT, which is now, I don't know if they're actually allowing them to trade, but certainly they're showing up on the dome now. Now, what you'll notice is that on these futures, these are the CBO futures, and they're in 10-point steps, and that is how much they're going to run per point. So the minimum tick size is going to be $10 per tick. So in other words, if the price ticks up from 1980 to 19090 here, that's going to, if you went long, that would be gaining $10 in value on the position. Or if you went short at 19080 and the price ticks down one tick down here to 19070, it's gaining $10 in value on that position. So those are the CBO futures. Now let's go over to the actual CME futures, which are /BTC. And what you're going to see is for the same tick values, you're going to see fewer candles here. Also the fact that they just started trading last night, so there's fewer candles, a little bit less volume showing up in the tick, right? So this is why I do that, because I want to see how much volume is out there. And so for these, notice how these are going to be in $5 increments, but this is showing a $25 per tick. So this is a larger notional value contract. And don't forget, the margin on some of these is enormous. So before you get too excited about trading these, please make sure you understand the contract values and specifications for all of these. All right, folks, that is it for today's report. Thanks for listening. We'll see you tomorrow.